Good morning, everybody. Hey, welcome to this Wednesday. It is October 18th. Yesterday was kind of a flat day. We've got a little tinge of red this morning. We'll talk about more when Dave joins us here in just a second. Before we do, though, let's not forget that there are so many things in this world that you and we just have no control over. However, you can take control of your portfolio by knowing how much risk you have in there and knowing how much risk you should have in your portfolio based on how close you are to retirement. Give us a call at 863-382-0037 to schedule your core retirement design. With that, we've got Dave next.
I can feel the magic floating in the air. Being with you gets me that way.
Light FM with Faith. Hill there, my daily dose of faith. It's 19 here before 9. Time to check in on money and see what's going on Wall Street this morning. Got Phillip Statler on the line from Statler Financial Services office in downtown Sebring. Phillip, good morning. Have you been pumping iron, getting ready to haul boxes on Saturday morning?
Hey, man, we are ready, getting everything lined up and excited about being available to shred stuff up for folks.
Yeah, let's remind everybody, we got a little different venue than we've had. If you're a regular at Statler Financial Shredder Day each year, we're doing it this year at a better location for traffic down near First Baptist Church downtown, right?
Yes, sir. It'll be 200 East Center Street. So we'll be right in that area and you won't be able to miss us.
Absolutely. It's 10 o'clock Saturday morning until 2 p.m. We want to stuff a shredder truck full of confetti with all of your important papers and keep you safe. Back up to yesterday here to start the day off. This was a mixed bag day yesterday. Nothing really exciting, but the blue chips on the Dow were up by 13 points, a rock crushing 0.04%. Standard & Poor's off by 43 cents, and NASDAQ was down by 34. That sounds like a really flat day, but the VIX went up, and it wasn't hard to see why when you looked at the intraday. There was like another 200-point swing in the Dow during the day, and similar percentages on the other indexes during the day. It was kind of a topsy-turvy day, everything being relative for a basic nothing close, wasn't it?
Yeah, it really was. I mean, you look at it ending up about where we started, and it's all the zigzags during the day.
Oh, yeah. It was one of those weird days. So, the volatility index has been going steadily up, and 18 is starting to get up toward at least fairly volatile. Brings us up to the morning, and it's not good news on virtually any front as far as housing information is concerned. Mortgage applications come out like 7:15 in the morning out of the Mortgage Bankers Association. They showed a 6.9% decrease in mortgage applications last week, and they made mention that that's the lowest number of mortgage applications filed in a week since 1995. I mean, that's before some home buyers' voices had changed. That's absolutely amazing when you consider that far back, isn't it?
That's a long time ago that they've hit that rock bottom. I mean, and you think about it, in 08 when we were going through the real estate crisis, we didn't get this low. So that's an interesting fact.
Yeah, that was the part that hit me. I harken back to 08, 09 when everything tanked in real estate, and right now the mortgage market is even worse than it was when you couldn't give a house away. It's just, oh, geez. The other information we got, this sounds like good news until you compared with what it was expected. Housing starts were up by 7% last month, but the downside is they kind of expected them to be up by 8.5%. About the only good news in the whole batch is they were expecting building permits to fall by almost 6%. They only fell by 4.5% last month. I'm calling that kind of a kiss on your sister bit of good news, wouldn't you?
Yeah, I would. And let's add to that, Dave, the 10 o'clock report from yesterday morning of the home builders confidence, and it slid to a 10-month low. They were expecting 44. It came in at 40. So that's, like I said, that's a 10-month low for the home builders confidence index.
It just kind of all adds together into a slowing economy, which kind of addresses something I mentioned when we were on the phone before we went on the air. Yesterday, I had two honchos from the Federal Reserve say that the trend in inflation is inexorably down, and we're looking at the right trend. Everything is looking like it's going where we want it to be. They didn't say it per se, but they were kind of implying that their point of view was that we didn't necessarily need another kneecapping in an interest rate bump on next month's Federal Open Market Committee meeting. Well, this morning I've got Barkin, one of the other Federal Reserve honchos, saying that there's, quote unquote, a plausible story that the slowing economy is working to bring inflation back to its 2% target by its own slowing. I'm kind of wondering whether those odds makers in Chicago that are guessing what's going to happen at the next Fed meeting are going to start saying, well, maybe we might get lucky and they'll hold steady another month.
Well, the rhetoric has changed a little bit, right? And from the Fed president's perspective. And so I think that they're starting to look at the numbers and letting those numbers tell the story and applying some common sense that maybe we are heading the right direction. Let's don't add fuel to the fire and drown what's happening already. So, again, that's yet to be seen what those guys do, because they never really do what we think they're going to do.
Well, maybe they've been listening to us.
Yeah, maybe that would be a good thing.
We've been preaching that gospel for a while now. Yeah, just like I said, we've been preaching this all along. It takes 6-9 months for an interest rate increase to filter its way and have an effect on the economy. We're just now finally seeing the first quarter ones take effect. And the trend is in the direction that, we'd like to have lower inflation. We want lower inflation. It's heading in the right direction, though, and there's a real danger when you start bumping interest rates without any great amount of forethought ahead of time. We could have another Volcker recession like we did in the early 80s, and nobody really wants that, while we actually have an off chance of getting a legitimate, fabled soft landing from this. So I'm kind of getting hopeful by hearing people that actually have a vote in the Open Market Committee saying maybe we don't need to kneecap on him again. So other things going on, we're getting into the meat of earnings season. Before we get to a bunch more financials, United Airlines was they didn't do that badly on the absolute numbers last quarter, but boy, they really tanked their own stock with a guidance figure, didn't they?
Yeah, they really did. They came in and released some soft guidance for the fourth quarter. The estimate was they'd come in about $1.50 to $1.80. But that's well short of what the analysts thought. The analysts thought they should come in like $2.06 a share. So that is putting a hammer to United Airlines, down almost 5.5% this morning.
Then you add on the fact that their guidance, they said they expected a bleak last end of the year, and there's just nothing but downward pressure on their stock at the moment. Talking about people making expectations that weren't very impressive to begin with, the banks that we had reports yesterday from, kind of two different directions. Bank of America did pretty well. They went up about 3% yesterday. Goldman Sachs, as I understand it, I think they made their numbers, but the targeted numbers were so doggone low, it pretty much screwed their stock price up. So we kind of had a tale of two cities. Got some more banks coming up today. Anything exciting coming out of the financial reports this morning?
We do. It's kind of a mixed bag, though, Dave. Citizens Financial Group, which is a regional bank, they missed on earnings. They missed on revenue as well. And so they missed across the board. They're trading down 3%. And we compare that to US Bank, obviously a larger bank than them. They put their third quarter out. They were in line with expectations. Revenue was in line. Earnings were 3-cent beat, right? 105 versus 102. So not a big difference there. And they're up maybe 0.1% this morning on that news. But let's remember, we have some brokerage firms that came out. Interactive Brokerage came out. They exceeded the estimates for the quarter by a little bit in both earnings and revenue, but they're down almost 4% this morning. Morgan Stanley, another brokerage firm, they beat on earnings by about 10 cents a share to $1.38, and revenue was just basically, you could say, in line with expectations. and they're trading down 3.25% this morning. So brokerage firms seem to be getting hit a little bit this morning. So I think
And
that's all.
I am starting to see a little bit of a pattern here that is almost drawing a picture that the consumer banks are generally doing relatively well because of the interest rate bumps. They're making more money off of their loans, but the brokerage firms and the big industrial and commercial banks, they got kind of a rough row this quarter, didn't they?
Yeah, they really did. We've also got, and we talked about airlines, we got JB Hunt reported. They're a big bellwether because they're delivering stuff coast to coast. And they came out for the third quarter, and they they were expected. Let's see, what did they earn? They earned $1.80 a share. They were expected to make $1.84 a share, so they missed on earnings. They were basically in line, missed by a tad, maybe you'd say, on the revenue front. They're down about 0.4% this morning. Not too bad.
Yeah, they're still getting punished a little bit for a 4-cent miss, aren't they?
Yeah, they are. They are. We had Travelers report. Travelers was down a little bit this morning earlier. They came in at $1.95 a share. Let's say that was well below the $3.01 that was projected by analysts. Revenue was slightly ahead of expectations. Actually, they bounced back up though from being down 1% earlier this morning to up 1.25% right now.
Okay, I got just came across my ticker. I'll bet you don't know the specifics. The big pharmaceutical lines. Abbott ended up having an earning beat and an optimistic guidance number. I don't think they've got a running ton of money invested in vaccines. Must be it, huh?
Yeah, it must be, because our whole vaccine portfolio not doing well. That's for sure.
No. I remember they absolutely stunk the place up when we had a couple of them earlier. I was figuring, oh yeah, all they do is they make tests. They're fine at Abbott.
So yeah,
we all want to know. We just don't want the dang vaccines at us. One more.
Let's see what I got. I got Procter and Gamble. They beat by about 9 cents a share. 11 cents a share. I get it right in my head here. $1.83. Revenue was slightly ahead of expectations as well, and so they're up 2.3% this morning. A pretty good play for them, and they're able to raise their prices as costs have gone up. So good news for them.
Take that happily. Tomorrow we got a couple of glamour stocks after the market closes. Both Tesla and Netflix will be reporting at the end of the day today. So we've got some household names to discuss in the morning. Resetting the table. It was kind of a nothing day yesterday at the close. Nobody really moved anywhere impressively after kind of a herky-jerky day. 45 minutes before we throw real money around this morning, what are we looking at?
Dave, I got to tell you got a lot of red ink on the index side. The Dow's down 0.25%, S&P 500 is down almost 0.5%, and the Nasdaq 100 is down 0.7, as well as the Russell 2000 down 0.75%. Like you said, the VIX moving up this morning, up almost 3%, trading right now at $18.98. So a lot of volatility out there. On the other side of the coin, we've got silver up 1.4%, gold up 1.3%, and crude oil, gosh, Dave, 1.88, almost 1.9% at $87.05. I've really had a hard time figuring this out though, Dave, because gas prices have continued to fall. Yeah, and oil prices are going up, and I just can't figure that out because that's not normal.
Yeah, the futures market there's almost a disconnect. I almost think that the retailers are looking at it and saying, well, this is just the Israeli-Palestinian issue, and it's going to blow over quickly one way or the other. And I've got a sneaking hunch that's more optimistic than they probably should be. But it's a disconnect I'm happy with for the moment when I fill up my gas tank.
Oh, yeah, I was happy yesterday, man. I filled up, I think, at $3.13, I think.
Yeah, which actually felt pretty good by comparison. Overseas markets, the Asian Rim uniformly down. Basically, the index is averaging about 0.5% down at the close this morning. I can't find a single green issue. Ditto over in Europe. The European overall index is down by about 0.5% halfway through their trading day as they kind of watch us and go, do these guys really know what they're doing over in the States? we'll prove that one way or the other as the days progress. It's time to look at getting rid of some important papers, and you're going to help out on Saturday, right, Phillip?
Yes, sir. Y'all come on down to 200 East Center Street there at First Baptist Church. You'll see us set up there. We'll have the big shred truck there. And from 10 to 2, bring your stuff. Or I said, say, if we happen to fill it up, we'll have to cut out early. But hopefully 10 to 2, we'll be there taking your stuff. We'll have some hot dogs and drinks there. So come on down and get your stuff shredded. And then also listen to us on the radio this weekend, right? Statler Financial Radio Show, 6 a.m. and noon on Saturday, 10 a.m. Sunday morning on Highlands News Talk 730, 95.3 FM.
And you and me again tomorrow morning, right here, same time on Light. Phillip, you have a good day. We'll see you then.
All right, take care.
Thank you. It's 105.7 Light FM and Statler Financial Services. Phillip Statler.
Hey, folks, again, I want to thank you for joining us today. Don't forget Shred Day this Saturday. Join us there. Hope to see you. And don't forget, the one thing that you can control in your investments is how much risk you have. You need to know what that risk is and how much that risk should be. Give us a call, 863-382-0037 for your core retirement analysis. With that, we will talk to you tomorrow. Take care.